Good morning, everyone. So today we're going to cover some things in the U.S. and the global domestic markets in terms of our economy. So the latest economic forecast that we see right now for 2019 is projecting a range of 2.5 to 2.6 GDP. And again, it's still early in the year to get some more information. So I'll get that out when we have more data. 2020 is looking like 2.2%. We've talked about that, a downturn a little bit. Everybody wants to know about recessions. Well, it looks like possibly late 2019, early 2020 could be a softening in the economy. Again, I said softening. We don't see a complete downturn. There are concerns about 2021. I attended the Harvard Economic Business Roundtable luncheon yesterday, and it was quite interesting. It's too much data to present today, but I will in the following month. So right now, the next time we have our meeting will probably be 1 or 2 days short of what's going to happen with Brexit. As you know, Brexit is taking place. Theresa May is between a rock and a hard place relative to getting things done. They still haven't come up with a consensus yet of what they're going to do in England. Are they going to stay or are they going to leave? The 29th is the deadline. That's a 2-year window that we're seeing.
We start from the place where our regulators already have deep and long-standing relationships. So the task is maintaining that trust, not building it in the first place.
Many of the economic indicators I'm going to talk today are showing a slight downturn over the prior couple of months. So in Europe, the real GDP the last quarter ran around 0.2 points. That was expected. However, for the year, the economy was down to about 1.2%. That's the lowest growth rate they saw since 2013. In Germany, we're seeing signs of weakening in the economy. Sales in the fourth quarter were down 4.3%. There's some concerns there, and we'll see what happens going forward. As you know, China, Europe, and the United States are the major players in the zone as it relates to global GDP. Those three areas have got to be strong to keep the rest of the world markets moving forward. The Chinese economy, and unfortunately my colleague is not here today, but Chinese economy grew at 6.6% last year. If you recall, about 4 years ago, we were almost in double-digit numbers of growth. It continues to wind down. The projections this year for their economy is around 6.2%. And again, this takes into account, or doesn't take into account, the impact of the trade discussions between the United States and China. They're projecting for 2019 a downturn again to 6.2%. So their economy continues to struggle, continues to decline. Australia, which hasn't had an economic downturn in maybe 25 to 30 years, is seeing a softening in their economy slightly. So it's a slow deterioration as we speak. So the fourth quarter in the United States, projections change. First we were thinking that it was going to be around 2.4%. It's looking more like 2% at this time. We still don't have numbers. We may have final numbers for the fourth quarter and for the full year sometime in late March, early April. And the good news is we've had 100 consecutive months of employment, of positive employment in the United States. That's an all-time record. So that's a very good statistic for us. California has been affected by the global trade war. We've seen California exports continue to decline. Last month they were down 15% to China, and it's continuing. So there's real concerns there, and especially with the commodity markets in California. Exports in general declined last month by 1.3%. Imports fell by $7.7 billion, and the gap continues to widen. What we're seeing in the retail sales market, the sales were down by 1.2% last month, primarily attributed to the fact that gasoline prices were down 10.1%. That's the good news, and it continues to decline as we speak. Holiday sales were great last month. For the holiday season, they were up a strong 5.1%. Across the board, it topped almost $850 billion in revenue. So that was a very good sign for the economy as it related to the holiday season. The jobs report for January, again, another blockbuster month. We saw 304,000 jobs created across the country, and as I said, it's the longest record that we've recorded for 100 straight months of employment. I don't have any data yet on California because the data hasn't come out, but again, we're continuing to be in the 25 to 30,000 range for new jobs. We'll have that data hopefully by next month. So we saw business and financial services rose by 30,000. Hospitality and leisure is a big player of 74,000, and construction continues to boom at 52,000 across the country. Very strong industries. Mortgage rates dropped down a little bit. They were 4.6% a month ago. They dropped down to 4.5 in January. The economists are projecting that the rates for 30-year fixed mortgages will be somewhere between 4.5 and 5.5 by the end of the year. Manufacturing again continues to decline a little bit. It dropped down 2 more basis points. It's at 54.2. The key to note here is if we go below 50, that's a major red flag signaling we could be going into a recession. So we're a long way from that happening. Small business confidence continues to drop. It's again for the 3rd month in a row we saw a decline in that area. Consumer confidence was down a big time. It's the biggest drop we've seen in 12 months. It was down 8 basis points to 120.2. A lot of concerns about taxation, regulations, trade wars, etc. So not going to change. A year ago, I told you that the estimation was that oil would go out about $100 a barrel. That was what they were trying to drive. The good news is oil last Friday, when I cut off my report, was at $57.29. So it's down like 15% all of last year. The target per barrel this year is a range of between $60 and $80 a barrel. So that's good for our economy. Prices across the United States over all of real estate for selling, prices have declined by 15%. That's a sign of the changing in the real estate market in the consumer side for residential, both new and existing home sales. Home sales last month, good news is the new home sales were up 16.9% in the country. This is great news. Again, some of the prices were lowered to move inventory. Existing home sales again fell by 1.2%. This is the lowest level since 2012. So we're seeing a decline in existing real estate. We'll see what happens later in the year as the market picks up. You know, the April timeframe, May, when more homes go on the marketplace because people want to move. In the area of mergers and acquisitions, there's a lot of activity taking place. Of one notoriety, a famous company right now, Tesla is in the news every day for various reasons. They just completed acquiring a company called Maxwell Technologies. It was a $218 million all-stock transaction. The key here is to speed up the electronic charging process. And this is the 5th acquisition the company has made since 2015. Anybody familiar with Spotify? Yes. They bought two more companies involved in their area of podcasts, and basically they're going to spend between $400 and $500 million to continue to buy more companies to dominate that space. Amazon is getting more involved in the home area of smart offerings, and they're buying more small companies to increase their presence in the marketplace. So we're going to see a lot more of that happening as automation continues to increase in your home. Johnson & Johnson has been one of the most active companies in the biotech space over the last 3 years. They just acquired a company called robotic device maker Auroras Health for $3.4 billion. This is a diagnostic and treatment for lung cancer. This is a major breakthrough technology, so we're seeing more things coming to market attacking the various diseases. So what else is happening? The day that we had our last breakfast, after that afternoon, PG&E announced they filed bankruptcy. So they are now in bankruptcy. They're trying to raise $5.5 billion of cash for debtor financing. So they're working on that. This is all attributed to the 217 and 218 wildfires that we've seen taking place in California.
Started 5+ miles east of this location, and it's made a hard push, wind-driven, into the city of Santa Rosa. And as you can see, it's impacting hospitals in quite a few areas north of Santa Rosa, including the Kaiser Hospital, some mobile home parks, and it has actually jumped Highway 101 as well. So
now keep in mind, we've had a tremendous amount of rain, which my wife doesn't like. But having said that, the concerns we have now is what's going to happen in August, September, and October of this year when everything starts turning brown. So that's another sign. So we'll see. Hopefully it won't happen. It's more gasoline on the fire, so to speak. New Toys R Us. If you have kids or have grandchildren, they're opening up some more new Toys R Us stores around the country, and hopefully we'll see them in the marketplace by the time we get to the holiday season later in the year. Charlotte Russe, for the women in the room, filed bankruptcy, and they're going to liquidate all 94 stores. So it's another sign of retail companies that are going away that have been around for a long period of time. A major red flag in the automobile industry. You know, we've seen a lot of vehicles being purchased over the last 3 years. For the first time, we have a record 7 million buyers are over 90 days late in their payments. That's a major concern. This is worse than it was in 2007 and 8 when we went into the recession. So this is something we need to keep our eyes on. One more thing, Payless Shoes has been in bankruptcy for some time. The decision was made within the last 2 weeks. They're going to liquidate all 2,300 stores. So they're going away completely. It's another sign of a retail company going away. There's two coal plants in Tennessee that have been on everybody's minds for a long time. They're both going to be closed because it would take $3.1 billion to retrofit them. So what they're going to do is the people that are working in these mines will be redeployed in other areas. Those that can't will be laid off. So this kind of goes against what the president wants to do in the coal mining industry, but these plants have to be either replaced or terminated. The soybean industry is a major commodity to the United States, specifically in California, as you know, and because of the trade wars, we've seen a complete restructuring of this area, and we've seen a downturn in our sales, and now we're losing market share to the point where South America is coming on strong to take over the global marketplace. So once we can get these trade deals in place, it's going to take projection to 2026 before we can come back and strengthen the marketplace. So that's had a major effect in California and part of the United States in terms of the commodities market. Brian, the good news is the Federal Reserve will stop paring back assets. So you know we've reduced assets by $4.5 trillion in the marketplace. These were put in the market to stimulate growth in the economy. So what we're going to see now is that's going to be pared back. So securities have been purchased from 2008 through 2014. That's going to stop now. It's going to slow down, come to an end. And finally, the United States, the good news is the war is on with 5G technology. We lead the marketplace right now, but we're going head to head with the Chinese. So they think by probably 2022, we will have 9% of the world market and the Asian market in the area of 5G technology. The population growth in the United States is projected to be about 2 million people this year. Employment in terms of the marketplace, they're expecting to add 2 to 2.5 million new jobs in the economy, which is good news. The unemployment rate will remain at 4%. It's been at 4%. This is the lowest in 50 years since 1969, the unemployment rate. This is great news. And then we're talking about the job openings are projected to be around 6 million. This is double what we saw in 2010. And then the average rate, like I said, on inflation is looking at somewhere between 3 to 3.5% for inflation. In the automobile industry, vehicles in general, this is automobiles, trucks, SUVs, look like they'll go out about 17 million this year. So again, we're seeing relatively flat, but not declining. So having said that, I'd like to open it up for some Q&A.
Okay, back to the questions. And Mark, you had a question, right? Or Greg?
I did.
Greg.
No,
Yeah.
I just wanted to ask on the 90-day delinquency. It seems counter-cyclical to what's really going on in the economy. And usually that's the big red flag of the downturn, but it doesn't make sense.
Well, here's the problem. A lot of people, first of all, you've seen the change in the tax structure, all right? Number two, people are working full-time, they're doing new things, they're buying new vehicles, and they're overspending in terms of what they should be doing. And that's a problem right now. So people are having problems. And that's going to continue, so they're going to have to watch the credit rating. So people are buying cars, and they're buying beyond their means. That's what's happening right now.
Steve, did you have a question? John?
One comment and one question, if I may. The question is about Germany. Do you have any additional information on what caused that dip?
No, I got this on the wire. I hope to have more information as we go. These are kind of like little snippets that I was able to pick up. But the German economy has been very strong for a long period of time, but they're having problems. The global economy, specifically Europe, is really struggling. Okay, there's been a softening in Italy, all over the continent. That we've seen a slowdown in GDP. It is, but Germany is the bellwether for that for the European common market.
And then the comment is related to the gig economy. Wharton came out with a study, and last year the gig economy was $864 billion. By 2025, they're projecting it to be $2.7 trillion. So a 213% increase over the next 8 years. So they're expecting that the whole gig economy is going to hockey stick. And there are currently 3.3 million independent workers who are making over $100,000 a year, and they expect that to increase as well.
And a lot of them are not in the statistics like many of you who are part of the gig economy. We figure about 20%, you know, and that's growing. So as we go forward, more and more people shift to be independent, to be free of the ins and outs of a job. Mark?
Yeah, the question in terms of with all the new jobs and all the new growth and employers having trouble filling jobs, where are the workers coming from?
Well, I mean, some people have been out of the marketplace for a year and a half. They just gave up looking for jobs. So they're coming back into the marketplace. Two, you're seeing a lot of mergers and acquisitions, and when that happens, you see displacements. So people are leaving. There's also some industries that are changing cyclically. So it depends on where the growth rates are in the various industries. Again, you look at retail, they're going through major changes. The top level of retail sales has dropped down. It's not everything going from brick and mortar to the internet, so it's very misleading. There's just a lot of changes that are taking place in the market.
This huge influx of Middle Eastern refugees, as they get put into society, could that help bump them? That's just Steve Kwong's sort of musings, but hopefully that might happen.
One last comment I want to make, and then I talked to a fellow yesterday who was involved with the Federal Reserve in New York for the last 20 years. Wall Street guy, great guy. He was part of the economic roundtable from Harvard yesterday. They believe strongly that sometime in the near future that we will have a trade agreement in place with China. And that will come to pass and we'll be able to move on. But everything is every day you hear it's good news, bad news, the market goes up and down. The point is we will have something resolved in the near future. And then from there we can move forward. So thanks a lot, guys.